So there is something very interesting that is going on in the airlines industry right now. On one hand, you have ace investors like Mr. Warren Buffett, who has sold his entire holding in the airline stocks last year when coronavirus started. So he had a position of approximately $4 billion across different airlines in the US. He sold them entirely. I'm not talking about cutting the position. He literally sold the entire holdings. On the flip side, you have ace investors like Mr. Rakesh Jhunjhunwala, who has invested in an airlines called as AXA Air. So, Mr. Rakesh Jhunjhunwala is entering the airlines industry and Mr. Warren Buffett has completely exited. Who is right and what you and I should do as normal retail investors? That is what we are going to discuss on this video. I have written a few questions on Probo regarding the airlines industry. Do go and check it out and take the trade on it because it helps you understand that you are actually implementing the things that you are learning from this video. It also helps you analyze things better, stay more actively engaged with the material that I'm teaching, and also make money in the process. So do check the links in the description box. Also watch this video till the very end. Fascinating video. You will also understand how to analyze high capex, high capital expenditure businesses and accordingly take a bet. So let's get the video started, and here is the first picture that I would want you to take a look at. Now this shows the historic growth rate of the airlines industry in India in terms of the number of passengers that were handled at the airport. It simply means the number of passengers who probably took the flight. So there has been a steady growth. For example, if you take the numbers from 2014, there were 169 million passengers. This grew to approximately 344 million passengers by 2019. So in 5 years, the industry size almost doubled. Great growth rate. From an industry point of view, if the industry is doubling every 5 years, that's a very good CAGR. And this looks like a very promising industry, especially given the Indian context. Because in India, people are not that rich right now. As our GDP per capita keeps on going up, more and more people are going to take flight. We don't need to undertake extensive research on it. This is a very simple, commonsensical fact which has been backed by the last 5 years data. Now 2020 was an anomaly year. COVID hit, it impacted the travel industry, but going forward, the COVID problem is going to subside to a certain extent and travel will resume, and these numbers are likely to exhibit a similar trajectory. So by listening to this story, you will get very fascinated that, okay, Akshat, you know what, this sounds like amazing. So should we go and buy airline stocks? So hold on, there is a reason why there is a saying that, hey, if you want to become a millionaire, start with $1 billion and start an airlines industry. So we need to look at this whole problem in a more holistic manner. So to make this decision, whether or not you should be investing in airline stocks, you need to understand two very different stories. The first story is about Air India, which the Indian government has decided to divest. So we'll study the story of that very, very quickly. And then we will look at a successful story of IndiGo, which is Interglobe Aviation. It is a listed stock. Then we will make the decision whether to buy this stock or not. Okay, so let's get started and let's start the discussion with Air India. Now, Air India has a great legacy. Now, if you go and read about Air India on Wikipedia, you will see like excellent information about it that, hey, Air India was started by Mr. J.R.D. Tata back in 1932. Talk about like building brand equity. It's like almost 90 years. Everyone knows about Air India. And like bunch of good things that they ran like Vande Bharat operation and they evacuated people. Air India has improved connectivity. It was a pioneer. It has done so much wonderful stuff. So great respect for the company. But over time, the company has suffered from a lot of losses. Now here is a very interesting paragraph for you from a Mint article, and it says that the carrier Air India has never made a profit since its merger with Indian Airlines in 2007. It posted losses of 7,982 crores in 2019, 8,500 crores in 2018 and 5,500 crore approximately in 2017. So consistent loss-making company, and that is one of the reasons why that the Indian government is divesting the business of Air India. Now why is it that Air India is suffering so massively? So one simple answer for that is that Air India has not been able to grow its sales. What does that mean? That it means that Air India has not been able to capture any massive market share. Now let me take you to my computer screen and let me show you the entire overview of the aviation sector as to how much share each of the major airlines have. Now, if you see the 2017 data, Air India used to be at 14% market share and IndiGo used to have approximately 40%, right? Then if we move ahead, now by July 2018, Air India's market share dropped to 12.5% in domestic flights. And Interglobe Aviation, which is IndiGo, its market share kept on going up. Now we are at a situation where Air India still has a 12% market share and Interglobe has approximately 54% market share. What does this show? That despite being operational since 1930, it has reached a stage where it is not growing. It is stuck at that 12% market share, which is very, very dismal. For a company like Air India, there are new entrants who come into the market. For example, IndiGo. It came in the market and started taking share away from other major airlines, including Air India, right? So for example, if you take a look at the data of IndiGo, back in 2017, it had 40% market share. Now it has 54% market share. So what does this tell us? This tells us that Air India has been a consistent failure for the last several years. Despite pumping in new money, it is taking loss after loss. That's A. B. It is not able to gain market share, because sometimes we make the argument that, you know what, Air India is like a Sarkari airline. It serves the nation. It is running missions like Vande Bharat and bunch of different good stuff. But despite all that, Indians do not want to travel via Air India. Why is that? It might be like pricing issues. It might be bunch of other different service related things. But bottom line is that Air India's market share has been going down. This is one of the primary reasons why Air India has reached a point where it is getting divested. Now you will say, Akshat, you know what? Okay, Air India is not a domestic flight alone. It runs international flights. You showed us the data for domestic flights. So where is the data for international? Okay, so let me show you that also. Now here is the passengers carried from April 97 to October 2018. And if you take a look at this entire graph, you will quickly realize that overall the market share has gone down. Generally speaking, it has barely moved from 97. The number of passengers carried have been on a general decline. There have been some years where it has gone up. There have been some years where it has gone down. But in general, it's a downward sloping curve. So this is a very important point for you to understand. So if I ask you that, hey, is the Indian government right in terms of divesting Air India? What would be your answer be? Do comment. I would love to read your answers. And now let me ask you the second question, that do you think that given this opportunity that almost Air India is failing, do you think that this is the right time for Mr. Rakesh Jhunjhunwala to enter and start his own airlines right now? And why do you think that he would win? So to assess whether or not Mr. Rakesh Jhunjhunwala should start his own airlines and when should he do it and when should he enter the Indian market, we need to quickly study whether or not airlines can be profitable in India or not. For this, let's take a look at IndiGo Airlines and let me show you some very interesting numbers for IndiGo. Now here are the numbers or market share for IndiGo right now. It stands at 54.2%, right? So it means that, hey, this is like literally a monopoly, so to say, that they have taken away more than half the market share in the Indian market with so many airlines. So they must be doing something right. Even their international travel has been a recent addition to their service line and they are exhibiting a good growth rate here as well. Now, why is it? So let's talk only about the domestic business of IndiGo. Now, what happens in the airlines industry is that if you're super specialized and if you can optimize for cost, that can prove to be a great advantage for you. Airlines is a high capex industry. So let me quickly explain you this concept, because many of you yesterday asked me that, hey, why did I buy like JP Power, right? JP Power. So number one, guys, it's not a penny stock. Okay, so definition of penny stock is completely different. JP Power is still a big company. It's not a penny stock. The price of the stock might be 4 rupees. That does not mean that's a penny stock. For assessing penny stock, you also need to look at the market cap also. Okay, so back to the topic. So I will explaining you about capex, right? So capex means capital expenditure. Now there are certain industries and name them, for example, railways, right? If you take a look at infra, if you take a look at housing, if you take a look at what? Power companies, right? If you take a look at airlines, these are all high capex industries. What do I mean by capex? Capex means that whenever a company enters into any of these fields, they have to spend a lot of money in terms of investments upfront, right? Investments upfront. For example, when any airlines company start, they will have to have a fleet of aircrafts. They will have to recruit people. They will have to build operations. They will have to buy slots at different airports. All this needs to be arranged first, and then you start seeing your first dollar kick in, right? So crores and crores of money goes into creating this expenditure. So this entire capex game needs to be very well managed. If companies do not manage it well, they become like JP Power, right? So with JP Power, what happened was that it was a high capex business and they took on a lot of loans, right? Very similar to Air India, that they took on a lot of loans. They were not able to generate cash flows, and as a result, their company took a hit and the share prices tanked a lot. Now, my philosophy of buying high capex business is this. High capex business, and this is the highlight of this entire video, that if you are buying a high capex business, what should it do? Number one, it should be available at a very good price, right? For example, JP Power is available at a very good price, therefore I purchased it. Again, not a buying recommendation by the way, but this is one of the key factors that I look at. And second, they should have rationalized their operation, right? I'll explain this via the Interglobe example as well. Rationalization means that you have figured out an operating model where you don't have to put in a lot lot of money every year to make more money. So essentially your ROCE improves, right? Or ROCE is respectable. I'm not saying that the company should have a 30, 40, 50 ROCE. ROCE mean return on capital employed. I've explained it on my earlier videos. Someone please comment what ROCE is. I would get to see whether you are learning something out of my videos. Okay, so back to the topic. Okay, so let's first and foremost take a look at the profit and loss statement of Interglobe Aviation. So if you see that March 2017, the operating profit was 2219 and it doubled to approximately 4,000. Operating profit also doubled, and in March the sales also doubled. So essentially it has done well in this duration. Now 2019 was a very interesting year. Now here you will see the operating profit being negative and also the overall profit going down massively. Now this will tell you a very important point about the capex businesses. Now what does that mean? So essentially let me take you through the cash flow statements and you will see something very interesting, that in 2018, the year before the major loss, what happened was that the net cash flow or the free cash flows available for the company was 518 crores. So what IndiGo did was that they expanded their capacity. So in 2018, IndiGo got like 518 crores and then it picked up that money and it procured more asset. Now in airlines, what happens is that if you're procuring asset, you get stuck with it on a long-term basis. For example, if you're buying a plane or leasing a plane, what happens is that you have to sign on a 5-year, 10-year, 15-year contract. So it's a long-term contract. If you're manufacturing a plane, then you're stuck with that asset for years. So as a result, you will see this cash flow from financing activity has been subsequently negative from 2019, 2020, 2021. The numbers are 592 negative, 2,400 crores negative, 1775 negative. So this has impacted the company a lot, right? So as a result, the current stock price is available at its pre-pandemic prices. So I feel that this is a risky buy. Why? Not because the company is bad. The company is of course really good. There is no problem. It has shown consistent history of growth. But the problem is that it is now going to face more competition from other low-cost airlines like AXA Air. Now this brings me to the final part of the video, that you have Mr. Rakesh Jhunjhunwala, who is starting a new airlines in an environment where the interest rates are low. For example, right now, if you try and get a home loan, the interest rate that you will be charged will be low. Why? Because right now banks want to give out more loans. If you would have tried to get this loan back in 2019, the interest rates were higher. Similarly, for any capital, massive capital expenditure like an airlines business, if Mr. Rakesh Jhunjhunwala is starting that, he already has massive access to capital. Plus, he's starting this business in an environment where the interest rates are low. So he can actually assemble a lot of assets, sign on a long-term deal where the interest rates are more favorable. So he does not have to refinance it and all that different things. As I showed you earlier, that even the most successful airlines company in India, IndiGo, it is struggling. From what perspective? From financing perspective. So according to me, Mr. Rakesh Jhunjhunwala sees a great opportunity. He's the right type of person to make this airline successful, especially given the current macroeconomics where a leading airlines company in India is struggling and he's starting a competitor airlines in a low interest cost environment. That is the entire game that is happening behind the curtain. When Mr. Warren Buffett sold his airline shares, he sold it in an environment fearing the coronavirus. Now, Mr. Rakesh Jhunjhunwala is actually taking advantage of that coronavirus situation and starting an airlines when this coronavirus is ending. So I hope you enjoyed the discussion. Do solve my question on Provo and I will see you the next time.